Hello, YouTube. Is it time to sell the rip already? We are noticing a very similar pattern this week that we did 2 weeks ago. What was it? What did it tell us? And what do we have to pay attention to this week? That's what we're going to try to answer for you today. So if you're enjoying the video at any time, I would encourage you to please smash the thumbs up. I really appreciate all of your support on the weekend. It really means a lot to me, and it tells YouTube that you enjoy the content and you want more people to hear about it. So let's jump straight in. 2 weeks ago, we gapped down, pumped up, formed a little bit of a higher high. Let's zoom in nice and close here. Micro higher high to close out the month of October. Then we ultimately form a bearish engulfing candle. That exact same thing happened this week. We gap down, push up, get above 400, 400.18, and then we sell off, and we are starting an inverted hammer here. This is a weekly candle, which means we're not going to know what it looks like until Friday, but there's some excellent early clues here for us to be mindful of. So as we look at that, we also want to look at QQQ because the exact same pattern formed here. And what is so interesting is just that this looks a lot more like a doji. Why? Well, because we're opening and closing at about the same price. So even with the higher high and the gap down, tech, which powered up massively last week, is holding the gains better than other sectors. That's what it means. What we really want to ask ourselves is whether or not this time is different than March and June. Because if it is, hey, this is a gap down pump up. We're going to blow through that high of the week. We're going to pump up to 410, 420, 500. Take your pick. If it's not different, we're going to reverse and fade fast. So looking at March, 10% rally. Looking at June, 17% rally. Looking back to October, about 12% rally. It's actually closer to 15 now. It's about 14.5, I believe. So this was our top ing pattern. Was not the top. It was a top ing pattern. We couldn't predict exactly where it would be. But the fear and greed here shows us that in late March, late July, and right now, we throttled and maxed out in the high 60s. And then whoosh, 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 all the way back down. Where are we right now? Well, we're here at 64. We were at 66 when we were green on the day, and now it has ticked down by 2 points here to 64. We have to keep in mind that tomorrow we're also going to have PPI or producer price index coming out before we have a lot more inflation reports out of Europe and Canada for the rest of the week. This number drops pre-market tomorrow. I'll be paying attention to it. So if we understand this is a top ing pattern, maybe not the top, what do we want to look for? Why does it matter? And what do we need to pay attention to? So now let's look here at SPY on a one-day chart. And what the one-day chart shows us is that yeah, that's an inverted hammer. We got a higher high and a higher low, which is technically bullish, but because we're closing at the low of the session, we're likely going to get negative follow through tomorrow. How much? How low? I don't know. We talked about all these levels on the weekend, so stay tuned all the way till the end. If you want to watch that video, we'll queue it up for you. And I'm really happy with the reception on the weekend video. I really thought it was a jam-packed video. I'm happy you guys agree. So when we look here to SPY, we note that we have our downtrend. It's not a perfect one because we're not actually touching here. We do touch here. But what I want to pay attention to instead is actually going to be the E-mini futures chart, ES. And I want to look here because this is a much cleaner chart and actually my preferred way to trade. I crushed it on ES today. I top ticked it within 2-3 points of the high of the day. I'm so happy with that. Realized a lot of gains. And if you want to come join us or see what that means, you can click on the link in the description to find out more about that and trade with me. But anyways, look right here. This is like a perfect touch. And what normally happens inside of here is that we coil up and then we decide if we're going to break bullish on the apex, which is where the uptrend and downtrend meet, or if we're going to break down. So we coil up and then break down. I've talked a lot about my medium-term thesis. And for today, what we really want to look at is going to be the daily feedback. So why are we down by about 0.7, 0.8 today on the NASDAQ and on the S&P 500? Well, the dollar was up. So the dollar's up, and the dollar's up because we heard about, we heard from President Xi and President Biden meeting today. And that meeting turned out pretty fruitful, meaning that there wasn't any huge headlines out of it. And that gave us strength for the dollar coming into overnight. We're going to see what happens. We got a lot of room to get back up to about 110 here, but I'm paying attention to it. Other thing I paid attention to today is just that VIX is up, dollar's up, treasuries are up, gold is up, gold formed a weekly higher high, and the dollar's up. Something's funky here. People don't have a problem with risk. It's a matter of what risk. In Bitcoin today, after all the drama with FTX over the weekend, I don't want to get into it. We heard from CZ today telling us that They're looking to secure a rescue fund for Bitcoin. It was red, went to green. We're right back here to a doji. So let's remember what a doji means. A doji means indecision. So massive leg down, dead cat bounce, higher low, indecision. What does that mean? We're undecided where we're going to go. We're probably going to go lower because that's a path of least resistance, but it's not yet confirmed. But ask yourself this. If the dollar's green and crypto's green, gold is green, why are stocks red? Exactly. Why are stocks red? Well, there's some other things at play which you might not know about, and that is called options expiry or OPEX. So what's actually really interesting is that we're going to look to today's chain, November 14th, and we're going to look at tomorrow because they've actually opened up Tuesday expiries now. Yay, another day to lose, right? Perfect. You can buy 0 DDEs 4 times a week now, probably end up being 5. Here we're looking at SPY on November 14th, which is today, on the 16s. And what it shows us here is that all these calls got burned. Everything above 397 was really where the volume was, but they came all the way down and squashed these 395s. And for the puts, all these babies got juiced up. So all the puts got juiced and minted. So they walked it all the way back down. But what's more important for me is what happens later in the week, and notably on Friday, because Friday is going to be OPEX. So we're not going to look at the Tuesday chain or the Wednesday one. All I care about now is looking at the Friday one because that is where the big money is piled up. So let's have a look here. So let's close this other one out. Done. Don't save. Let's draw in here now. So this is the 18th of November, and we're looking at the 16s. So we're looking at SPY on November 18th for the 16s. 16s just means 8 strikes below and 8 strikes above, which means where we're most likely going to trade. It's not a guarantee. What I'm noticing was this 400 strike here. As we got over 400, the volume really did not move from where we opened. So there's no more gamma and then just push down. And there's a whole bunch more puts to burn on this side than there are calls. So what I think we're going to do is I think the people who are buying heavy at 390, heavy at 395, I want to see if that reduces or increases the open interest because that's a clue for what's going to happen. And what I would note is I still think we're going to close at about 400 this week and form that weekly hammer. So what would happen? How do we close at 400? And note the premium here too. It's worth about 250 right now. Overnight, it was worth about 4, which means break even is at 404, 405. So for the weekly candle too, let's look at the weekly, then we'll look back at the daily, then we're going to wrap it up. So looking here at SPY, the way a hammer gets formed is that we open up, sell off, and then come back up and close near the high. That's what happened in 2008, if I'm right about where we currently are in the pattern. So if we're going to push down, I'm looking for support at about 390. We just noticed that strike getting all of that volume. So I think we're going to come back down to about 390 on PPI, on CPI out of Europe. And then we're going to rally up to close the week out at about 400, which would mean we're going to come back down, right? Touch our pink line, which is our pivot, and then probably come back up and close Friday right where we started. That's what I believe is going to happen. Am I right or wrong? Drop me a comment as you guys always do. And if you want to watch more, there's a video right now you can watch from the weekend, which is our weekend review. Otherwise, thank you so much for watching. And if you're still here, I would really appreciate if you could smash a thumbs up. Thanks so much. I look forward to seeing you tomorrow. Thank you.